What's going on, guys, and welcome back to another video. So as the title suggests, today we're going to be discussing all things dividend portfolio related and how I plan on creating a large dividend portfolio over time. So in today we're going to break it down into 4 separate parts. Firstly, we'll discuss my reasoning behind why I want to create a large dividend portfolio. We'll then discuss on an Excel how much you need invested to make around $1,000 a month. Thirdly, we'll kind of go through some portfolio construction in terms of how much I plan on investing, also what stocks and sectors I plan to look into as well, and finally we'll go through some tips and tricks on what things you should consider when looking into dividend stocks. So with all that being said, let's dive right on into today's video. Now I suppose the first thing to go through is the reasoning behind why I want to create a dividend portfolio, and we can see on screen here on a Word doc I made kind of 5 bullet points. The first point here is that it's part of my 0 to 1 million goal over the next 5 years in that 5-year plan, which I link that video in the description below. Now I do want to have about a quarter of that 1 million or 250,000 invested in dividend stocks, and the kind of 4 points underneath are the kind of main reasons why as well. The first kind of main point is because a normal, let's say, growth stock only pays you capital gains. That's if it goes up in value. Now with dividends, obviously it's kind of a double effect here, which is very useful, especially through compounding effect over time, and that is capital gains and also dividend payments. Now, as I'm sure you're aware, you know if you have a dividend stock, it pays dividend payments. Now the frequency changes from stock to stock. Some might be monthly, some quarterly, or some annually. It all depends on the stock itself. We'll discuss that later on in the video, but that's kind of one of the main points or reasons why I want to invest in this stock portfolio, because of the compounding effect over time. And that kind of brings you on to point 3 as well, the snowball effect. Now, through these dividend payments, they'll automatically reinvest back into the stock. Effectively, each time we'll be getting more and more, or higher dividend payments, should I say, which eventually will compound and have a fairly big snowball effect over the years to come. So that's kind of one of the main reasons here as well. And fourth reason is because of the passive income side of things. Now, obviously, capital gains comes through every stock. However, dividend payments will be passive. Obviously, once you put in the hard work at the start and construct a portfolio, the kind of passive dividend payments will be coming into your bank or reinvested into the stocks, depending on which way you choose. And the fifth reason as well is because we are going to have such a large amount of capital invested, hopefully up to $250,000 over time, that we do want to have safe blue chip stocks, and most dividend paying stocks are kind of blue chip safe stocks as well. So obviously you don't want to have 250,000 invested in fairly volatile stocks. So that's kind of the main reasons why. Now we're going to have a look through how much you need invested. Now this might seem daunting as well, but we'll go through the investment Excel of how much you need invested to make $1,000 a month through dividends. Okay, so earlier on I constructed a very basic portfolio Excel here of 10 dividend stocks across different sectors. Now we have various dividend paying stocks here ranging from about 8.4% all the way down to about 2%. So there is a kind of a broad array or mix of different aristocrat stocks here as well, which kind of gives you an overall accurate feel. And you can see at the bottom here as well, you have about 3.39% average dividend payment. Now again, that will vary a lot depending on what stocks you pick. Obviously, some stocks pay higher dividends than others. Again, we'll go through that later on, but for the purpose of this demonstration, we have an average yield here of about 3.39% annual dividend payments. Now also, before we looked at this Excel, I said it would be fairly daunting, and obviously starting from 0, you can think these figures are completely unrealistic and unattainable. But again, over time, this compounding effect will take effect, and hopefully over the next few years, we will be able to get to that 250,000. Now we can see here, even in column F, that your annual dividend payment for each of those stocks for this example are about $5.92 for the top one, for example here. So you can see that's an annual payment. Now some of these stocks will be paying annually or quarterly, and even Realty Income down here pays monthly as well. But we can see here that you need $442,000 in this example here to be making about $1,000 a month, or $12,250 annually, which equates to about $253 weekly, or about $30 or $40 daily. Now again, you don't, like, that's just like training for a marathon. You don't obviously start running and be able to run the whole marathon straight away. You need to start from ground zero and work your way up. So over time, this compounding effect and snowball effect, once your shares increase. Now as an example here, the 350 shares for each of these 10 stocks you would need to get this €1,000 or $1,000 a month. Now obviously you're not going to start off with 350 stocks in any one of these. Probably start off with even half a stock in some, maybe even one full share, and slowly over time you build this up, and the compounding and reinvesting of dividend payments will also help you buy more shares, and over time you will have the obtainable goal of getting about $1,000 a month in dividend payments. Now obviously you're not going to get there at the start, but even set way smaller goals than that, by even getting $10 a month starting off maybe, and then work it up to $20 and $50, slowly to $100, and then obviously carry on up the line. But definitely, time is definitely on your side here as well. The younger you are starting dividend investing, the better, because the compounding effect again and the snowball effect will definitely pay dividends over time. I just want to make one more point here as well before we go into how I'm going to construct my portfolio, is that this $12,250 here is only from dividend payments. That doesn't include capital gains. So obviously over time your stocks will grow in value, which will eventually or inevitably give you more of an increase in value in your investment as well. Next, let's discuss very briefly my plans on constructing this dividend portfolio. Now, a few points to note here. Obviously, as we said at the start of the video, the end goal here is to have $250,000 or 250,000 invested in dividend stocks. We're going to be using Trading212 as my broker of choice here. Now, the main reason here is because you can buy fractional shares, so I'll be able to take advantage much easier with smaller amounts of capital when the markets fall to dollar cost average in here. Now also there's 11 sectors in the markets, as you're probably well aware, so I do want to diversify across all 11 of these sectors. So probably I want to have about 20 to 30 stocks overall in this dividend portfolio. Now again, the reason I want to have 20 to 30 is because we will have a large amount of capital invested, so I do want to diversify out my risk. So we probably will plan on having 2 to 3 maybe from each of the 11 sectors, again equating to about 20 to 30 stocks here. Now that will be our overall plan, and in terms of when we're actually starting will be next Monday. We'll kick it off. We'll probably put about 200 or 250 over here to get the first kind of inevitable kick off here in terms of my investing. So I'm really looking forward to that. And in terms, we will also have the stock pie or portfolio pie on Trading212. Again, we'll kind of go through that when we're actually creating that on Monday morning as well. Now, like me, if you're planning on creating a dividend portfolio, a very good place to start is looking at the dividend aristocrats. They're the kind of blue chip tried and tested stocks that have paid dividends for X amount of years over time and increasing their dividends over time as well. So that's definitely a safe place to start. An example of a dividend aristocrat here, for example, the top one would be 3M. Now also, once I look at what stocks I plan on investing in, obviously you need to diversify across different sectors because different sectors react differently to different market conditions. And kind of two main folders or websites I usually look at are Yahoo Finance to kind of an overall feel of the stock, and dividend.com is very useful as well, which we'll have a look at now. So here we are on dividend.com. Now, as the name suggests, it's very useful for all things dividend related. For this example, we're just going to look at Coca-Cola, ticker symbol KO, which is currently trading at about $56.22 per share. We can also see here that it's currently paying a dividend yield of 2.99%, which equates about $1.68 annually per share you hold. Now, obviously, if you're starting off with only 1 or 2 shares, this $1.68 won't really add up to much, but certainly over time, the snowball and accumulative effect will certainly really increase your dividend payouts over time. Now we can see here it has a forward payout ratio of 69.1%, and it is definitely one of the dividend aristocrats here, which is very safe in my opinion, which has a yearly increased dividend of over 59 years, which is extremely impressive. Now, as mentioned earlier, in terms of frequency, stocks are they have different frequency in terms of payouts, and Coca-Cola's case, they pay out quarterly. Now that doesn't mean you get 168 every quarter. That gets split into 4 and divided out and paid quarterly. Now again, as mentioned, this mightn't seem much at the start, but over time, over the months and years, these payments will certainly increase. Now, just one limitation as well in terms of discount brokers like Trading212, you have only protected up to €100,000. So again, we're miles away from that at the moment, and it probably would be a good problem to have that much money here. But obviously, we want to have 250,000 invested, so I don't want to have 150,000 here kind of open to being wiped out if the company did go bust, on the unlikely event that happens, that is. So probably when we're creating this pie, although we want $250,000 invested over time, we'd probably have 100,000 of that on Trading212, which we'll set that goal on our Trading212 pie once we create it on Monday. And then we'd probably put the other 150,000 maybe into the Giro or something like that, again just to spread out the risk. But again, that's miles and many moons away to have 100,000 invested. Let's get there first and we can worry about that afterwards. So that's pretty much the end of today's video. I just wanted to give you a brief overview on my plans, which will be kicking this off next Monday once the markets open. So I just wanted to go through my plan of action and why I'm investing and why I want to build a large dividend portfolio. So thanks very much. And also, before I go, I'd love to know your own input in the comment section below. How many dividend stocks you hold, if you believe you prefer dividend or growth stocks and your reason behind them. And also, if you have any tips or tricks for new investors investing in dividend stocks, please comment below. So thanks very much. I hope you enjoy the rest of your day, and I will see you all in the next video.